Hey everyone, Coach Investor back to another video for you today. So if you missed the first one of the day, this was about Roku. We covered the earnings report. That's going to be in the top right corner. In this video, we're going to cover Shopify. Now, while the company beat on the top and bottom line, the stock currently is down 6 to 7% or so. Of course, those prices might change whenever you're watching this video. I'm going to explain throughout this video why the stock is down. I'll give a little hint here. This quarter was solid. Guidance was okay, but expectations were maybe a bit higher because, as you remember, we mentioned this in the last video. We talked about the price increases when it comes to the services that they provide. Prices increased approximately 33% or so. So the overall market was maybe already anticipating the positive effects of those price increases in the guidance. Of course, in the current quarter, you would not have seen any effect on the price increases, but the overall market was probably expecting guidance maybe to be a bit higher. Of course, they will mention more during the earnings call. The important points that they will mention, if something changes, I will pin it in the comments down below. But the big picture is basically this: solid quarter, beat on top and bottom. Guidance was okay, but market was expecting a bit more. Of course, the stock price has gone up quite a lot since the start of the year. So granted, expectations were maybe a bit higher as well. So that's basically the big picture. If that's enough for you, fine, but I would really appreciate if you stick around, maybe hit that thumbs up button, subscribe if you have not. If you want to support me even further, do check out the links down in the description and the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So first things first here, let's have a look at a GMV. So that's $61 billion. That's up 13% year over year, or 17% on a constant currency basis. That's outpacing US retail growth of 6%. With regards to Shopify, it's again one of these stories of great companies, but maybe not at the correct price right now. Now, one of the factors driving these numbers is strong spending throughout the holiday season, record-setting Black Friday, Cyber Monday numbers. We've covered that in past videos. Now, when it comes to revenue, so that's $1.7 billion, that's up 26% year over year, or 28% on a constant currency basis. When it comes to merchant solutions, that's obviously outgrowing subscription solutions, so that's up 30% year over year to $1.3 billion. And then subscription one is up 14% year over year to just over $400 million. Now, with regard to these two things here, I do want to mention that with growth comes a cost. So obviously revenues here, we've talked about this, and cost of revenue. Now with regards to merchant solutions, so as you can see, we've seen 30% growth year over year, but also quarter over quarter. As you can see, I put a little note here. Last quarter was just under 1 billion. So quarter over quarter, that also grew quite nicely. When you look at merchant solutions, the cost of revenue last quarter was 621 million. So again, you can see that approximately growth for the revenue side 30%, but also cost of revenue increased approximately the same. Now going back to our slides here, GMV processed on Shopify payments. Of course, throughout the year they made a lot of announcements, audiences, ShopPay Pro Plus, the fulfillment network, Promise, etc. So really throughout the year they have built a lot. Whatever they've built throughout 2022, 2021 as well, this will bear fruits in years to come. Of course, the Shopify fulfillment network, the acquisition of Deliver, this should become really a huge part of Shopify's success in the years to come. Now, that's not to say that audiences or Promise, which by the way, Promise is their, let's say, sort of Prime, which also proved to be quite good for businesses, which they show us right here. They say up to 25% increase in conversion rate with Shop Promise. Of course, you might remember Amazon when they say that Buy with Prime was available to, merchants outside of the Amazon.com ecosystem. They showed us approximately the same numbers there. So it's going to be very interesting to see the competition between, Shop Prime and Buy with Prime, because I do believe that Buy with Prime will probably hurt businesses like Shopify, like other, let's say, companies that do a bit of the same. But Shopify certainly is one of the bigger players out there. And again, just so we're clear here, you can have multiple winners in this market. So going back here, $34.2 billion of GMV processed on Shopify payments. That's up 23% year over year. GPV penetration of 56% versus 51% 1 year ago. And quarter over quarter, they saw an increase of 210 basis points. Now you might think I'm crazy for showing you this slide again, but as you can clearly see, somebody did not proofread this. Twice the same slide. Not great. Anyways, total attach rate here, which they define as revenue divided by GMV, continued to grow over time as merchants use more of their solutions. So back in Q4 2017, that was 2.44%. Now it's 2.85%. Of course, this is a span of 5 years. So yes, it has increased, but not by that much. Then when we go and look at the monthly recurrent revenue, so that has now increased 7% year over year to $109.5 million. Shopify Plus penetration is 33% versus 29% 1 year ago. Now they say here strong gains in Plus and point of sales monthly recurrent revenue, partially offset by near-term deferrals from free and paid trial experiences that began in Q3 2022. Of course, in the months to come, that effect should, let's say, disappear a bit. Then when it comes to gross profit, just under $800 million, that grew 15% year over year. Adjusted operating income is down from $130.2 million to $61 million. Now, I do want to show you again the operating expenses here. While we're going to touch on this a bit later in this video, I do think that we just touch on gross profit. I think we should all notice that this is still has increased quite a lot year over year. And then with regards to stock-based compensation, if we scroll down here, you can clearly see that year over year, this is up as well quite nicely, which isn't so great. But that said, cash flow from operation is here $97.4 million. Of course, when we go back and we look at this, cash flow from operating activities, yes, stock-based compensation is underneath it. Why is that the case? Well, those are just accounting rules currently. But circling back here, cash flow from operations less CapEx is just under $90 million. Cash and marketable securities, pretty healthy there, $5.1 billion. Now, when it comes to profitability expectations for 2023, so they see here impact of our compensation leveling exercise. They changed the overall compensation system to be better aligned with the market. This has resulted in higher compensation expenses starting in the back half of 2022 that we expect to continue into 2023. Now, with regards to the expense run rate of the Shopify fulfillment network, it is a significant opportunity in early stages of integration and development. They expect the Shopify fulfillment network to be a headwind to gross margin and a significant contributor to operating expenses in 2023. Now, again, if you're a Shopify shareholder, I think this is an okay hit right now. I strongly believe that this was a necessary move for the business, especially for the long term. If you think that Shopify would be a success in the long term without a big and a stable Shopify fulfillment network, well, then I don't think you should have been investing in Shopify. So yes, expect to take a hit, but if I were a Shopify shareholder, which I'm not anymore, I think this would be very acceptable. And then when it comes to Q1 outlook, so they expect revenue to grow in the high teen percentages year over year, gross margin to be slightly higher than Q4, operating expense to grow in the low single digit percentages versus Q4 2022 expenses when excluding one-time charges in Q4, stock-based compensation to be in line with Q4, and then CapEx to be in line with what we spent in fiscal year 2022. Additional commentary here related to that quarter. So, of course, they have to talk about the macroeconomic backdrop, elevated inflation pushing consumer to discounted and non-discretionary purchases trend is improving. Pressure to consumer spending and e-commerce. Now, we've seen the retail numbers that came out, and I believe that grew 3% or so, which is better than expected. So, should be a good sign, but maybe a bad sign when it comes to Jerome Powell and his decisions in the next coming months. Now, they continue here by saying outlook consideration, dilutive impact of Shopify fulfillment network, which we just talked about, compensation structure change, incremental investment in key teams. Again, this is all normal. This is to be expected. Now, before I conclude this video, a little conclusion of Shopify in 2022. So revenue grew 21% to $5.6 billion, $650 billion of global commerce since Shopify's inception. They have approximately 10% of US market share and expect further penetration. When it comes to unique online shoppers, approximately 561 million from Shopify merchants in 2022, and then millions of merchants in over 175 countries. Now, to conclude, Shopify is building something big here. This will take time. Everything that they're doing throughout the year, whether it's Plus, whether it's Shopify Fulfillment Network, audiences, Promise, the new tax thing, everything is making sure that those existing merchants right now, everybody that's using Shopify's products today, despite the price increases, should be staying. Why? Because this is a sticky product. Whether it's software or whether it's the point of sale system, if you're an online shop, doesn't matter. They're building a huge ecosystem so that once you're in, you don't really want to leave. And when they'll tell you you have to pay now a bit more, you're gladly paying a bit more because this is providing you so much value. Now, of course, they still have a lot of work to do when it comes to the overall profitability of the business, lowering expenses, etc. Let's see what happens in 2023. I think the market also is looking at how many big players they can attract. Of course, we've talked about Mattel, huge player, toy maker, if you don't know. They've attracted that. They've attracted others as well. As we've seen Netflix, for example, Netflix Shop. Yes, Netflix has a shop. For those that didn't know, it's built on Shopify. So while valuation here, as we've talked about with Airbnb and the Trade Desk, by the way, if you've missed those videos, it's going to be in the top right corner as well. Valuation wise, yes, it is expensive, but for the long term, let's say, if you're a holder, have some patience because they are truly building something huge here. It takes time, but hey, as a long-term investor, I think time should be on your side. Of course, do share your thoughts down in the comments below. What did you think about this quarter and outlook? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.